Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope everybody had a very beautiful day of trading. And in today's markets, guys, well, unfortunately, what started off as a decently green day quickly eroded itself towards the end, and the markets ending red, ending the month of June on a red day, and closing out the second quarter on a red day as well. And we had a bunch of news come out today, guys. Number one, we had the PCE Inflation report come in earlier this morning, which came in line with expectations, which led the market to initially have some gains. So we're going to cover that, obviously, on the channel today. Number two, we had the results of last night's presidential debate between Donald Trump and Joe Biden, which, unfortunately for Joe Biden, because of his lackluster performance, saw Donald Trump's odds of winning really skyrocket right now. And we're going to cover one element of policy that was discussed briefly last night, which I do believe will be the game changer for the entire election. Number three as well, we had some consumer discretionary spending concerns. Nike, we covered their earnings last night when they were down about 10% in the after hours, plunged an additional 10%. And couple that with the fact that Walgreens also had earnings yesterday coming down 22%, a lot of concerns over consumer discretionary spending. And now the talks are starting, guys, about a consumer spending recession. Companies have been hinting at this for the last 6 months, and not only Nike and Walgreens. Think of other companies too. You saw it in Starbucks. You've seen it with Pepsi and Coca-Cola and their guidance too. You've seen it with Walmart. You've seen it with Dollar Tree and Dollar General, citing concerns for consumer slowdown. You've also seen it in Walmart, even though their stock price hasn't been too much affected. They have noted consumer spending is down. You've seen it with Lululemon as well. They've gotten crushed. And then lastly, you've seen it in some of your beauty product suppliers, such as Ulta Beauty, Estee Lauder, and L'Oreal, which is pretty much the juggernaut of the entire beauty industry. So all of these companies have been citing consumer slowdowns, guys, and it may just be a time and case for looking out for a potential consumer slowdown, which could send the US economy into a little bit of a mild recession, which would be a consumer spending slowdown recession. So a lot of things to cover in today's video, guys. We're going to cover those three hot topic macro items first, then dive into our technical analysis portion of the video. I'm going to do a major rundown on our major stock market indexes right here. And since it's the close of the month, we're going to take a look at the monthly candles and see how those are shaping up as well. And then lastly, dive into our big tech names. So a lot to cover on today's video, guys. Let's get right into it. So SPY down about 0.39%. Was not always the case, though. SPY actually was up 0.4% on the day and ended the day red. Top to bottom swing of about 1.1%. QQQ, same thing. They were up about 0.6% on the day. And then a lot of big tech names started giving back gains left, right, and center, ending the day pretty much negative here. And that was a top to bottom swing of about 1.7%. So could we be heading into a little bit of weekly consolidation? That is what we'll take a look at on the channel as well. Now let's take a look at our heat map, guys. You can see that a lot of the downside was led by big tech, right? And most of your big tech names heading to the downside. NVIDIA as well, another red day. However, they were one of the only names in semiconductors that were pretty much red. The rest of the industry doing quite well. In terms of financials, guys, your banks were doing well. However, Visa and MasterCard continue their little bit of slight pullback. Now, also in terms of healthcare had somewhat of a decent day. UNH doing most of the heavy lifting there. And the bottom half of the market, guys, very, very mixed market as a whole. This heat map, for all intents and purposes, early on in the morning was fairly green, but ending the day extremely mixed. Now, moving into the one-day relative, you can see that even better how mixed of a market it was today here, guys. Only a few sectors in the green and not green that much. And then to the downside, guys, everything pretty much led by technology. Heavy losses coming into the end of the day, which leaves us 1 week relative, guys. Very, very mixed market. As you can see, guys, half the market is up and half the market is down pretty much. So very, very mixed market sentiment right now. I would not be surprised if this does lead us into a little bit of weekly consolidation after such significant 4 weeks of rally. May just be time to take a little bit off the table and head into a little bit of weekly consolidation for the month of July, at least the earlier part of July. So before we get into more technicals, guys, let's run through a few things that happened last night. So number one, guys, we're going to take a look, and these kind of all go hand in hand, right? So number one, we're going to take a look at the presidential election. So after last night's debate, obviously, Donald Trump now has a 67% chance of winning. Joe Biden, unfortunately, now sitting at around only 22% odds. So there's been a lot of discussion whether or not the Democratic Party is going to change their candidate midway through this election cycle. A lot of people are potentially predicting either Gavin Newsom or Kamala Harris. So that is obviously to be monitored. However, we're not here to debate politics on the channel. We want to know, how is this going to impact the markets? So the one thing that we need to keep in mind, guys, for impacting these markets is going to be the one thing thing that consumers care about the most in terms of the economy, which is going to be taxes. So a lot of people know that what Trump's presidency was taking pride in was the fact that he enabled so many tax cuts, not only for large corporations, but also for small businesses as well. Now, keep in mind this right here, guys, right? So in terms of the debate last night, it was only talked about very, very briefly, but Donald Trump did reiterate that if he were to win the election, he would roll back Joe Biden's tax increases and bring them back to the levels under which he was president. So here is the quote. One key issue is the Republicans' expiring tax breaks enacted via the Tax Cuts and Job Acts of 2017. Without action from Congress, several provisions will sunset after 2025, including lower federal income tax brackets, a boosted travel tax credit, and higher estate and gift tax exemptions. So this is pretty much your succession taxes, among others. More than 60% of tax filers could face increased taxes in 2026 if the tax provisions expire, right? So obviously, guys, we know what kind of macro environment we're in right now. Interest rates are very, very high and consumer spending is getting squeezed. Housing costs are really, really high as well. So consumers are looking for help anywhere that they can find it right now. And that all starts with two things. The government can only intervene in the economy in two different ways to help you with purchasing power. Number one is interest rates coming down. Those are slated to come down later in the year. But obviously, guys, the president can't really put too much pressure on that. That is entirely up to the Federal Reserve. The only thing that government can change itself is the tax rate. So obviously you guys know that Joe Biden increased the tax on corporations from Donald Trump's 21% all the way to the mid 30%. And that makes a heck of a difference on bottom line margins. It also makes a heck of a difference on how many people you can employ. If you're spending less money on taxes, you can employ more people, but also charge less for your products, right? So it goes hand in hand. This, in my opinion, is going to be the number one thing that consumers are going to be focused on in terms of this election cycle. Why? Just because people are dealing with reduced purchasing power and they want to hear what the government is going to do to help them in that respect. So we will keep a very close eye on the taxation narrative, both put out by the Democratic Party and the Republican Party as this election cycle moves forward. Now, what also goes hand in hand with this, guys, is the PCE inflation report that we got last night. So let's take a look at our PCE data, right? So we were expecting 2.6% and it came in deeply in line with that, exactly on par, 2.6%. Let's take a look at exactly what was said in the report. So key Fed measure shows inflation rose 2.6% in May from a year ago, as expected. Now let's take a look at some of the headlines. An important economic measure for the Federal Reserve showed Friday that inflation during May slowed to its lowest annual rate in more than 3 years. That is very, very good, guys. I keep bringing up this graph every time we get a PCE report, and you can see inflation, although remaining slightly sticky, regardless of whether you use the PCE or the CPI, it is staying roughly sticky between 2.6 and about 3%. For the last pretty much 6 months for all intents and purposes. The downtrend is clear, but now we're getting a little bit sticky around these lines here, guys. And I do think that this trend will continue to the downside. If you look at the Federal Reserve projections, as a matter of fact, they expect inflation to get more towards 2% by the midpoint of next year. So the trend is continuing down and consumers are spending less and less money. We've heard that from different companies as well, right? Now, we are also going to take a look at consumer spending in a tiny little bit. It is just additional news that monetary policy is working. Inflation is gradually cooling. That's a relief for businesses and households who've been struggling with persistently high inflation. It's good news for how policy is working. So obviously the Federal Reserve keeping interest rates as high as they possibly can, it is really starting to crush consumer spending. Consumers are saying it, and now companies alike are saying it too. And you can see that by the amount of significant earnings drops that we've had in the last 6 months for companies that are exposed to consumer spending directly, right? So that being said, outside of the inflation numbers, the Bureau of Economic Analysis showed that personal income rose 0.5% on the month, stronger than the 0.4% estimate. So this is saying, guys, that personal income is outpacing the rate of inflation right now, which is very good. We took a look at this last when we covered when we covered the CPI, right? Let me blow it up for you guys a little bit if you can't see it too well. So this is pretty much I'm sorry, guys, I don't know why it's not getting bigger here. So here's pretty much your earnings. Earnings are slated to be at about 3.9% year-over-year growth. Overall inflation only around 3.4. So personal income is going up faster than the rate of inflation. But as I've said, guys, it takes a lot of time for people to build up savings reserves as well as they had back in 2019, 2020. Consumer spending, however, increased 0.2%, weaker than the 0.3% forecast. So consumers are pulling back on purchases again. However, housing prices continue to rise, up 0.4% on the month for the fourth straight time. Shelter-related costs have proven stickier than Federal Reserve officials have anticipated and have helped keep the central bank from reducing interest rates as expected this year. Shelter, guys, it's all in shelter. We keep bringing this up every single time we have an inflation report. It is not the goods right now. Goods are in a deflationary cycle. What continues to be a squeeze for consumers is your housing costs. Take a look at this, guys. Consumer spending right here is your disposable personal income, outlays, and savings. This is from your PCE report this morning. Take a look at the trend, right? So blue is the amount that people are saving pretty much. The orange part is the amount that people are spending. So you saw in November and December leading into Christmas, people spending a lot more than they're saving, of course, right? Or rather spending a lot more than they're earning. January after Christmas, you have the reverse. And then February and March, it resumed. People continued spending more and more than they were earning. But now in April and May, coincidentally, the same time that companies have really started issuing negative guidance for the second half of the year, you can see that trend has flipped. People are starting to save a lot more money. Consumer discretionary spending has come significantly down. Look at April, look at May. People are earning a decent amount. However, they're spending significantly less, right? And this trend is going to continue as consumers continue to face off with high prices. Now, why are they spending less here, guys? Well, we have to understand what is the largest component of inflation right now. So largest component of inflation right now is undoubtedly shelter. So the red line right here, this is your previous CPI from May, right? So you can see overall inflation is about a 3.3. And if we put commodities and food, you can see commodities and food are no longer the problem. They are actually deflationary right now. What is the problem, guys? Is this purple line right here. Shelter is just so sticky right now. Lead this into the next point right here, guys. Shelter is a large component of people's budgets, of course. Here is your home price to income ratio. You'll see that right now, currently, in terms of your income, right? So let's say you make $100,000 a year, right? The average price of a home could possibly be $500,000, $600,000, $700,000, right? So it's in terms of how much income is in relation to the price of a home, right? How many times your yearly salary do you have to pay for a home? And look at this trend, guys. This chart goes back all the way 70 years. So you can see in the 1970s, 1980s, it was as low as 3-4 times income. So if you're making $50K a year, the house would maybe only cost $150, $200K. You can see how that purchasing power has eroded over time. And now we're arguably at the worst we've ever been. A house for an average person is now 7.66 times the average income. That is very, very high, guys. And you can see when this all started, pretty much after the pandemic, it has actually gone up, about 150%, right? So very, very steep increase right here from about 5.5 times your average salary to about 7.7 times. Very, very problematic in my opinion. You can see that even best expressed by this chart right here. You can see this median income slowly trickling up here since 1985. It really gets dwarfed, right? Even though your median income is up 3 times. Now, obviously, this doesn't take in consideration CPI and inflation, right? But still, you get the point, right? Housing prices far outpacing the gains of anybody's average wages. Now, couple this with this again, income. This is a chart from Redfin. Income needed to afford. Typical home hits new high in 2023. This chart is 1 year old. Apologies for that, but you guys need to see the trend that's happening right now. Before people only used to have to spend about 30% of their income or less to buy a home. And now housing costs have risen above 40%. And the trend is the same in 2024, guys. Almost high 30s, low 40% in terms of the amount of your personal income that you have to spend on housing in a given month. That is a lot of money, right? Couple this, again, another chart from Redfin right here. Typical household makes $29,000 less than needed to afford the typical home. And this data is fresh from about the midpoint in 2024. You can see this was not always the case. As a matter of fact, all the way through 2021, people could largely be able to afford a home and even have more than the required amount of money to afford a home. Ever since we've had a problem with inflation and interest rates have been skyrocketing, guys, most of this, yes, is due to the interest rates, but still just goes to show you how unaffordable it is for most people. As a matter of fact, this peaked in October. The typical household made $40,000 less than needed to afford an average home. And in February 2024, still about $30,000. So people are not even close to being able to afford a home right now. So all these things combined, guys, right? It just leads us to believe that consumers, as we've been seeing on the channel, guys, it's just more data to support it. Consumers are really stretched right now, and housing is a big part of that problem. Now, when interest rates come down and there starts to be more inventory on the markets and more competition, and also landlords can lock in a lower interest rate, which means they can lower rents, because now if you're a landlord, guys, you have to charge higher rents. If not, with the current interest rates, your buildings just don't cash flow. And most landlords will not accept a negative cash flow. They'll accept a little bit of negative cash flow, but not minus 5, 6, 7% per month type of thing, right? Which is where people would like the rents to be, but unfortunately they're not. So this needs to be offset, guys, by lower interest rates and a buildup in housing supply and a buildup in renting supply. So far, not the case. So we will need to revisit this data when interest rates do start declining right now. So that's pretty much everything for your PCE report and how it ties into consumer spending. Now, item number 3 that we're going to go over briefly, guys, is of course Nike and Walgreens. So Nike down 20% on the day. Walgreens boots yesterday down about, excuse me, right here. I'm not too sure what. Oh, my bad, guys. So Walgreens as well down about 22% as of yesterday's trading. Both companies citing a consumer slowdown. We have seen this, guys, time and time again for the last 6 months. Think of companies as well like Starbucks. Starbucks here having one of their worst days in pretty much 20 years for the company. Also take a look at Pepsi, right? Pepsi, ever since they've been citing consumer spending declines as early as last October, they have pretty much suffered the same fate, right? Really coming down in share price. Coca-Cola has been largely the same, even though they've been able to recapture a lot of it. This was the consumer slowdown concerns. Now, another company as well that's been citing consumer slowdown concerns is Target. Target getting absolutely crushed, still relatively close, relatively far off the all-time highs, right? Another couple of companies, guys, we're going to go through these, right? Dollar Tree as well, usually one of the bellwethers for a recessionary time, just can't get the job done, right? Continuous declines in consumer spending, which is affecting their margins. Consumers are still spending on essential items, but anything they don't need, they're not buying. And those are Dollar Trees and Dollar General's higher margin items. They're just not getting them. Dollar General, huge collapse due to consumer spending. Walmart, even though their share price has been unaffected largely, they have been citing now for 2 quarters in a row that consumer discretionary spending is a problem. Take another one, guys. You want me to go through more? Let's go through more. Lululemon, exactly the same problem. Let's go another one. Ulta Beauty, exactly same problem, all starting within the last 6 months as well. Estee Lauder, even though this problem has been lasting for a while. Company obviously has a mixed problem as well, and management is just not doing a good job with the company. Still, renewed concerns over consumer spending. And now even one of your juggernauts in the beauty industry, L'Oreal, right, which is one of the powerhouses in the beauty industry. Look at this headline right here, right? So Estee Lauder shares blush red after rival L'Oreal trims guidance because of lowered consumer spending. So this is obviously having a big toll on retail-facing stocks. So is this part of a signal as of maybe a concern for a consumer spending-driven recession? Well, a lot of people are starting to think so. And I actually spoke with a very notable person on this same matter just last week, over the course of last weekend. Here is a video of me with one and only Kathy Woods. And what we were talking about last weekend, guys, was the fact that we were potentially leading in to a consumer slowdown, right? In terms of consumer discretionary spending, which has been a trend for now the past 6 months, but now it's really starting to show in companies' earnings. Now, you may say whatever you want about Kathy Woods' performance for her funds and whatnot, but what we can't deny is she has access to an incredible amount of data, both retail and institutional data, and the network that she has, and they're all pretty much saying the same things. They are concerns over consumer discretionary spending. So should we just avoid these companies as a whole? Well, maybe not, guys. You have to look for the silver lining. We have to understand whether or not this is a byproduct of consumer spending being driven down as a whole, or whether or not maybe consumers are shifting their consumption habits to maybe some competitors. So if we take a look at Nike, right? Nike, yes, consumer spending slowdown is one of the main causes for concern for the company. However, the main one, in my opinion, is the lack of innovation and management's inability to really consolidate or really control its market share dominance. It's been attacked by so many new entrants. Think of Hoka, think of ON, think of ASICS, right? Nike has pretty much left to the side its traditional running business in favor of more designer shoes, right? New hot releases, but it's not been doing so well in the line of business that it's always been doing well in, which is actually just pure running shoes. People are just going to other brands right now. So even though Nike is down and is a consumer discretionary spending, Look at one of their major competitors. ON has been significantly up in that same time. So it just goes to show you guys, if you have good products at affordable prices, people will still buy them. So that's just for Nike. Take a look at Starbucks, right? Starbucks, consumer discretionary spending, slowdown in China. Well, number one, yes, but number two, they have an issue with quality control, guys. The quality of Starbucks' products has been coming down for the last 4 or 5 years, and they've just been charging more and more higher prices for those same products that the quality has been dwindling. Not a lot of people talk about that. Take a look at Starbucks as one of main competitors for Starbucks, Dutch Bros. Dutch Bros in the same period, pretty much since February, they have been up, right? Even though Starbucks as a whole has been net down. So once again, people pivoting, if they see that they can get a similar quality product or better quality product for a cheaper price, they will go to it. And our job as investors is to recognize these competitive opportunities into other brands. Now, you can take a look at other companies, right? A company like Target. Target's been going down significantly, right? What has been replacing Target for a large portion of their business, guys? Well, just think of Amazon, right? And Amazon, same thing for Walgreens. Amazon now offers prescription services as well. So they cover the pharmacy business, and everything else Walgreens pretty much sells, you can buy on Amazon as well. So even though companies like Target and Walgreens have been down significantly, what is one of your industry winners? It has been Amazon. And Amazon doesn't only have that retail business, they have the cloud business, right? And the advertising business. They also have a similar streaming business like Netflix. So their business is very, very wide. So that's why a lot of people just pivoting into Amazon in favor of those other companies. Companies like Dollar Tree and Dollar General, right? Significantly down. What has been one of their main competitors right now on social media? Well, it's a company called Temu. I'm sure you've seen them. Very, very cheap Chinese products, similar to Alibaba. They've been marketing the heck out of them on Instagram and TikTok as well. And who owns Temu? Pinduoduo. Now look at Pinduoduo in that same period of time, right? You can see stark contrast between Dollar Tree and Dollar General. People are just getting better or the same quality products, cheap products, right? Online delivered to their door. Now, another company like Lululemon, right? Take a look at Lululemon, significantly down here pretty much since December, right? Only declining. What is one of their main competitors, guys? I've said it when we went over Lululemon earnings. Online brands on Instagram and TikTok offering very decent quality products for a fraction of the price of Lululemon. A lot of people saying Lululemon products are now overpriced and they cannot afford them in this current economy, right? Other companies like Ulta Beauty, take a look at Ulta Beauty, down. Take a look at Estee Lauder, down significantly, right? L'Oreal, even though they've been doing a great job of holding up, largely flat pretty much since the month of December. What has eaten their lunch? Elf Beauty. Why? Because this company does only online viral marketing. They have no physical stores. Yes, you can find their products in Walmart and Target. However, they have no physical stores. They don't have the overhead that these other companies have in terms of their other costs, which is why their margins have not been affected. And what does Elf Beauty do? Elf Beauty is perfectly targeted in terms of the consumer segment that is struggling the most in this current macro landscape. They are offering quality products at a cheaper price than the competition. So that is our job as investors, guys, to find these companies who are replacing or rather making up for the lack of foresight in these larger players as we go through economic downturn potentially, right? So that is just a little bit of analysis here on consumer discretionary spending. Could we potentially be going into a little bit of a consumer spending recession? Absolutely yes. What is the defensive strategy against it, guys? I've said it time and time again on the channel. We have to concentrate into the highest companies in the world. The S&P 500 doesn't have the highest weights in the best performing companies for nothing. It is because they are the ones that will stand the test of time. I will be heavily concentrating, guys, in most of your big Mag 6 names right here. If you don't like NVIDIA, if you think it ran too much, I'm going to be probably doing a lot more ASML. ASML manufactures the machines that manufacture the semiconductors. So a lot of people talk about picks and shovels, right? Talking about TSM, talking about the semiconductor manufacturers, right? TSM, AMD, and stuff like that. Broadcom, of course, right? Now, this is the company that, that makes the picks and shovels, right? So it's an even better bet, and they have pretty much a monopoly on the entire industry, and their valuation is relatively cheap. So instead of playing NVIDIA, as much as I have been probably, I will be pivoting to making a lot more swings in ASML. I just think it's at a very decent valuation right here. So that is the type of company that I will be going in. Extremely high quality companies, guys. Think of Visa, think of MasterCard. You may think, well, credit debt is at record highs. Well, here's the thing, guys. I don't know if you know this, but Visa and MasterCard do not hold the debt. Who holds the debt for their cards? The banks that issue their cards. If you look on a Visa or MasterCard, you will see it doesn't only say Visa and MasterCard. It says JP Morgan MasterCard. It says Bank of America Visa, right? The banks hold that debt. These credit card companies, Visa and MasterCard, all they do is collect fees. That is all they do. That is why they have such high margins. That's why their business model is probably not going to be affected that much by a consumer slowdown, right? People will keep using their cards as much as they have. They've been pivoting away from cash, pivoting away from debit cards, and that is a secular trend that will likely continue. One card that does hold the debt for its consumers is American Express. American Express is not issued by any other banks. They are their own bank, pretty much. They hold the debt of their cards, but American Express, their consumer segment, as we covered during their most recent earnings, their segment is more of a higher middle class segment to, let's just call it for what it is, rich people segment, right? That is pretty much a lot of their consumer base. Arguably over 70% of their consumer base is higher income individuals. That's why they're not affected so much. But still, if you want a retail facing stock that isn't really affected that much by recessions, even though they have been down a little bit since March, is Louis Vuitton. Louis Vuitton conglomerate. They pretty much almost have a monopoly on what they do. It's a conglomeration of about 80 luxury brands in the world. And you guys know better than me, rich people in recessions don't lose money at all and don't really change their purchasing trend, their discretionary consumer trends, right? So this is my only pick for consumer retail spending. I was a big fan of e.l.f. Beauty in the 150 range, but up here, it's a little bit high. If we come back down to 150, that may be a good bet for me. But just think of just really, really solid companies, guys. We have to concentrate into the most solid companies of them all to weather out this potential consumer slowdown recession. So that was a long segment on what we're going to do. I'm keeping it a little bit short. I could talk about this, guys, for an hour, for 2 hours and go through different companies, right? I might put out a video in terms of the safer stocks to be potentially positioned in leading into a consumer slowdown recession. And that will be a different video for another time. But I just want to briefly cover this topic right now in light of everything that we've been having, right? The presidential election last night, PCE data from this morning, earnings from Nike and Walgreens, right? So hopefully this all makes a lot better sense. Now, let's get into our technical analysis portion of the video, guys. Sorry for that long segment right there. Hope you guys appreciated it. Now, in terms of our SPY, guys, well, SPY is potentially in jeopardy of losing the daily uptrend if we were to continue this rollover, which is expressed by the loss of the hourly trend today. If we continue this hourly downtrend and roll over on the daily and break our most recent higher low, 542.32, daily downtrend is underway. And then we'll be looking on the weekly, guys, for a little bit of weekly consolidation. Good thing for us. There's a lot of support below us, guys. 12 EMA sitting right here. This level 531 seems to be a very juicy location, and anything above 519.29 looking for a bit of a weekly pullback before maybe the rally trend continues in the later half of the month of July. Keep in mind, in July, at least we get one more CPI report. So if inflation does continue coming down, that may be very good for the markets as well. It may ease some pressure on consumers just the same. So looking very good on the daily, might be looking for that daily rollover right here, just looking for weekly consolidation. And I'll be waiting right here to potentially make some bids on a few companies. On the monthly, guys, the monthly close is absolutely gorgeous. SPY, really beautiful monthly control right here. No red flags at all on the lower time frames. So monthly full control, weekly full control, and daily looking a little bit dicey. But as I'll remind you guys, any downtrend is just looking for a weekly higher low, and the bulls have tons of space above that 518 level. Moving on to QQQ right now. So QQQ also pulling back on the day, setting pretty much the lower high, and now maybe looking to revisit these lows, 473.81. If we do revisit and break them, daily downtrend is underway, and then we'll be looking for a little bit further weekly consolidation on these markets after a nice 3.5 weeks of rally. May just be time for a little bit of a pullback, similar to what we got right here, right? So very, very normal market structure in my opinion right now. Keep an eye right here, your weekly 12 EMA, 458 and the start of this big support zone, which is prior all-time high resistance. So all in all, the bulls have a lot of space, guys. Anything above 443.24, looking for that weekly higher low for the continuation of the trend. Moving on to the monthly, guys. Monthly, I mean, it is so beautiful right now. No red flags at all. Extremely strong monthly candle close. So that's why I say, guys, the bulls are in full control of everything. And even if we were to set some weekly downtrends in a later part of the year, guys, so much space. Anything above 413 on the QQQs, looking for that monthly higher low for the furtherance of the trend to the upside, right? Huge area right here. Going to be very difficult for the bears to get through, in my humble opinion. Moving on to XLF financials right now. So financials struggling a little bit, mainly because of your credit card issuers remain down today. The banks did very well, but Visa and MasterCard doing a good job of pulling down the index off of the previous day's highs, right? So financials still trapped right now, still very much trapped. What we're looking for at this point, guys, is one of two things. A break to the upside, guys, of 41.83. Daily uptrend is started anew, and then we may be able to get some legs on this weekly uptrend recapture. However, getting dangerously close, guys, if we break yesterday's low around 40.72, daily downtrend is underway, and then we will desperately look to these weekly lows to act as defense. 40.4, guys, have to keep these to keep this weekly uptrend alive. If we break them, weekly downtrend continues to be underway, and then we look to the monthly levels, 39.49, to be acting as the last line of defense here. All in all, guys, on the monthly, everything doesn't look too bad. It is just a very tight monthly accumulation range at the top for the last 3-4 months above our prior all-time highs. This is the best location where you can get some sideways consolidation and then potentially explode. I do believe financials will really only start getting a lot of legs when we have more clarity on the direction of interest rates and the timing of interest rates. Now, a little bit of muted trading, but one thing's for sure, guys, if we do see some furthered weakness in QQQs, we need to see financials start making up for it, similar to what they were doing last week. Moving on to healthcare right now. Healthcare as well, very mixed day as a whole, guys. Really big tightening range here above our most recent area of support, which is a good thing. So the bulls are trying to maintain this daily uptrend, still trying to maintain anything above 144.72, looking for the daily higher low for the eventual trend recapture. Need to get a break of 147.25, guys, to really get some legs onto this movement. On the weekly also very tight range of consolidation, guys. This pretty much looks like a massive bull flag, in my opinion. It's looking very good for the eventual breakout of the XLV. Now, one thing as well is if QQQ continues pulling back here, we need to see financials and especially healthcare bulls start playing their part and give us some rallies. That will do the best job at keeping SPY alive. All in all, though, guys, not in jeopardy of losing large levels yet. Anything pretty much above 140.57, even if we do consolidate a bit more, just looking for the weekly higher low for the eventual weekly trend recapture. So not looking too dicey for healthcare just yet, but still definitely one on the watch. We need to keep a close eye on that rotation. Moving on to semiconductors right now. Semiconductors a little bit weak into the end of the day. They actually started very strong and gave it all back, right? So now we're in jeopardy, guys, of if we do continue this drawdown right here, if we break 255.23, daily downtrend will be started on SMH. That will be the first time since the month of April. So if we do get that daily downtrend underway, keep in mind we are just looking for a little bit of a weekly pullback, weekly consolidation. Healthy weekly consolidation never hurt anybody, right? Anything above 198, just looking for a weekly higher low for the continuation of the trend. Keep an eye on these levels down here, guys. 245 down to 240. Your weekly 12 EMA is right here. Prior all-time high area of resistance that could be acting as a newfound area of support. And that would be a decent pullback for SMH, guys. That would be roughly a 50% pullback on this entire move. That, in my opinion, is where the bulls need to put a stop to it, because if we pull back too much, we may just end up in a little bit of a tightening range at best. Worst case scenario, we end up with a big drawdown. Only case where we get a large drawdown, guys, is if the market starts pricing in slower than anticipated growth in semiconductors. So far, no sign of that just yet. Moving on to IWM Russell. So IWM Russell, performing somewhat decent on the day, 0.41% to the upside. Nice to see them get a new daily uptrend underway and now closing above our moving averages. We will see if they can hold that up next week. Definitely a good sign, though. So now, any pullback at this point, looking for a daily higher low, anything above 198.71, looking for the daily higher low for the daily trend change. Looking pretty good. Could be a little swing trade opportunity if we do start revisiting these lower levels right here, maybe 201, let's call it 201, 200, little swing trade opportunity. Stop loss goes below the low because we're looking for the daily trend change continuation for the bulls. And then we would be targeting these highs right here, right? So the risk would be pretty much only about $2 to the downside, and the upside from 201, 200 would be about $6, $7. Looks like a juicy swing trade opportunity for me. Moving on to the weekly now. So the weekly also not looking too bad either. Just very slow consolidation by the Russell right now. So what we need to see from the bulls Continue push to the upside here right now, guys. So we're going to be trying to attack 209. If we can't get it done, may just end up in a little bit of a tightening range. As I've said before, guys, the Russell is not going to rally extremely hard until we get better direction and guidance on interest rates, because that is what's going to make the risk on trade fly. And this sector is pretty much the poster child of the risk on trade. And as long as yields are high, guys, we cannot get the rally on risk on assets that everybody has been looking out for. On the monthly close, not looking too bad at all, guys. Still a nice monthly uptrend, looking for that trend expansion. In my opinion, guys, maybe only late July, early August, if we get more clarity on a rate cut in September, maybe only then will we finally get to see the monthly breakout out of this 212 level. All in all, though, guys, not looking too bad on the Russell, holding up a lot better than expected. Now, lastly, the Dow Jones. Dow Jones also hesitating sideways, so Dow Jones needs to be careful right now. If we break this line right here again, 39,900, it will be a daily confirmed downtrend, loss of the moving averages, which would not be good and would send us into further weekly consolidation. It has now been tight weekly consolidation for the past 4 weeks in a row. Need to protect this level right here, 38,000. Anything above that, looking for a weekly higher low for the eventual trend recapture by the bulls. So not out of the woods yet, guys, but the bulls really need to get their butts in gear, break above 39,600, get this daily upswing in motion, get this weekly upswing in motion too, and start recapturing more and more of the damage that's been done. So far, so good, though. In terms of the bounce, total size of the bounce, we're up to about 80% worth of bounce. So the bulls really do have a good shot at reversing this into a new confirmed weekly uptrend. On the monthly, no red flags at all, guys. Beautiful monthly uptrend. Looking for the monthly higher low. That's why they need to desperately defend 37,600. I don't think we're going to get close to that. But if one thing's for sure, guys, monthly uptrend needs to be maintained. Over July or August, we will need to see a break of 39,800. Really get that monthly uptrend back in motion, as now it's been slightly struggling for the past 3 months on the Dow Jones. So that's pretty much everything for our major indexes, guys. No real major red flags just yet. The bulls control all the longer term time frames, but the dailies are starting to roll over on a few of our key indexes, namely the SPY and the QQQs. And considering the fact that the market breadth hasn't been the best over the past month and a bit, need to see the market broaden out to really backstop some of the significant drops that we may have if ever we get some really negative macro headlines. Now, moving into our big tech names, shall we? So moving into Apple down about 1.63%. Apple was up on the day, but down. You'll see that was the case for a lot of big tech names, guys. So Apple, what are the bulls looking to do potentially? They need to defend 207.03. If we can defend 207.03, set a higher low, and crack the highs, new daily uptrend will be in motion. As of now, though, guys, looking like the bears maybe want to continue this daily downtrend. That will be a loss of 207.03, right? Lose 207.03, lose this 12 EMA at the same time, daily downtrend underway, and looking for maybe furtherance of the weekly consolidation phase on Apple. After 10 weeks of rally, would not surprise me if we take a little bit more off the table on Apple. The weekly still looking gorgeous, anything above 164, looking for that weekly higher low. And I would just watch these levels right here, guys. 200 is going to be the level to watch on Apple, in my opinion. If SPY and QQQ continue pulling down and Apple gets brought down with them, this is going to be a very nice area for the bulls to defend. The 12 EMA on the weekly is there as well. Great swing trade opportunity if Apple revisits. Let's call it 205 down to about 200. I will be placing some bets on Apple. On to the monthly, guys. Very strong monthly candle close on Apple. Gorgeous monthly uptrend as a whole. So even if we get a little bit of pullback in the month of July, it would not be the biggest deal for Apple at all. Apple has tons of space on the monthly, anything above 164.61, looking for a monthly higher low for the furtherance of the trend continuation. And all of this prior all-time high resistance is going to be very strong support for your bulls. Moving on to AMD right now. So AMD still battling in this location. They tried for the daily trend change, but couldn't get it done, guys. Double top right here at the tops. We will still be on the watch, guys, if they can break this level right here, 166.57. If they break 166.57, we're going to get the new daily uptrend in motion. We haven't had a daily uptrend, guys, since pretty much this location right here in the midpoint of the month of May. So on the watch for that, battling with the moving averages and battling with this red box. We've been stuck in this red box for like a month and a half of trading. Prior support right there, huge area of congestion. And what is that red box, guys? Is it your previous all-time high? So the bulls are trying their best to defend. We'll see what happens, of course. And obviously, if we break it to the downside, 156.06, daily downtrend unfortunately started anew, and then we'll be just in further weekly consolidation mode for the bulls. The weekly not looking too bad, right? In terms of the structure, I know it's very, very messy right now. Just keep in mind, guys, we are trying for the weekly trend change attempt. Need these weekly higher lows to be set, need the bulls to make a push in the next 2 weeks and start getting above 172 and start attacking these 180 levels again. As of now, guys, still anybody's ball game. One thing is for sure, if we do revisit the 150 area, lower 150s all the way down to maybe 140, that in my opinion is an area on AMD where I can play it with a bit more size. So I will be continuing to play short puts in that location. On the monthly, guys, monthly not looking too bad, right? We did get the monthly higher low last month, and now the bulls are just looking to maybe make a second attempt at these all-time highs. The month of July will be very, very crucial for that. So it is essential for your bulls to really get their butts in gear on AMD and start pushing these daily levels higher, weekly levels higher, and really get into that monthly swing momentum back. Moving on to Amazon now. So Amazon also pulling back heavily on the day, down about 2.32%. But from the highs of the day, guys, Amazon down about 3.26% top to bottom. Very red day for them, but we were expecting this, right? In terms of Amazon's rally over the last couple of days, it was significant. Hourly trend was significantly overbought right there. Even the 4-hour was significantly overbought. Now we're getting a little bit of cool down. Amazon bulls with tons of space. Anything above 185.21, just looking for a daily higher low for the trend continuation. Now keep in mind, guys, prior all-time highs, previous resistance, going to be very big support because this was resistance pretty much for a better part of the last 2-3 months of trading. So could be a situation in which we get a little bit of a touch, breakout, retest, and then reattempt at new all-time highs. We will see if Amazon can really get to that $200 psychological level in the month of July, but so far so good, looking very good above the moving averages as well. So this level right here, 190, 189, could be a nice little swing trade location. Entries go here, stop loss below here, because if we break this location, it invalidates the daily uptrend, right? So stop loss, let's say we get in at 189, stop loss is at 185, $4 worth of risk, and then we're looking for at least the $200 level, so it could be about $11, $12 of upside and only $4 of risk. The risk reward is fairly good on this one. Moving on to the weekly, guys, Amazon weekly uptrend. Yes, it did close the week with a little bit of a doji on top. So even if we do pull back into next week's trading a little bit, start retesting this 190 level, that's okay, guys. Anything above 173.69, looking for a weekly higher low for the eventual weekly trend continuation. Nothing wrong with this chart at all. On the monthly as well, guys, beautiful monthly uptrend, no red flags whatsoever, anything above 166, just looking for a monthly higher low in the event of a larger form pullback. But I like this chart a lot. We have now cleared the prior all-time highs with a lot of space, so the bulls have a lot of wiggle room. Looking very, very good on all time frames. Moving on to Google right now. So Google also in the red today, 1.84% of the downside, coming off their all-time highs, looking a bit like Amazon, right? So where's Google maybe looking to retest? Well, anything above 175, looking for a daily higher low for the eventual trend continuation trade. Now, this location is going to be a very solid one. You got the 12 EMA, the 26 EMA, prior all-time high resistance, going to be newfound support. So a little bit of a retest and maybe run could be in the cards for Google. Now, in the event that we roll this over, let's say, just like Amazon, well, the bulls have tons of space on the weekly. Anything above 171, looking for a weekly higher low for the eventual trend continuation on Google. Not looking too bad at all. No major red flags just yet. And the monthly, guys, is extremely gorgeous on Google. Look at all this space they've created. Anything above 131, guys. Just going to be looking for that monthly higher low in the event we go through a few weeks of pullback in the month of July. Could be a case in point for July being a little bit of a consolidation month for the markets, and then maybe resumption of the trend. So Google looking very, very strong. Moving on to Meta right now. Meta down about 3% on the day. Not that great of a day at all for Meta, but Meta does have a decent amount of space as well. So daily uptrend still in motion, looking for the daily higher low, anything above 493, looking for that daily higher low for the trend continuation. Where are we getting rejected, guys? Getting rejected at the all-time highs. It's now been 2 days. The bulls have tried to push in there and they get rejected every single time. So in the event, let's say we even lose this into a daily downtrend, is that big of a deal? Not really, guys. Meta bulls have tons of space. Anything above 455, looking for that weekly higher low for the trend continuation. The area of support that I like the best, guys, is this green box, right? So pretty much previous support right there, previous resistance, and that starts pretty much at your 482 all the way down to roughly 459. Very strong area for the bulls to defend, in my opinion. So a little bit of weekly consolidation in this zone, set the weekly higher low, make another attempt at the all-time highs, a very likely scenario for Meta. And on the monthly, guys, monthly, no red flags whatsoever. Meta recovering beautifully since their earnings crush right here. Monthly higher lows are set, and now just looking for that continued trend expansion. No red flags on Meta whatsoever. If anything, if we do revisit this location, location could be a juicy trade opportunity. Moving into Microsoft right now. So Microsoft also down 1.3% on the day, and that was due for Microsoft, right? Just grinding higher. Bulls looked a little bit weak. Overbought conditions on the daily, slight overbought conditions on the lower time frames as well. Not anymore on the 1 hour, but you guys get the point. So in terms of Microsoft, guys, keep a very close eye on this level right here. 441.50. Lose 441.50, and you may end up setting in motion a potential for the daily downtrend. If we do get the daily downtrend here, guys, just know that Microsoft 2 on the weekly has tons of space. Anything above 404.06, just looking for a weekly higher low for that trend continuation. So if the markets pull back in the first 2 early weeks of July, expect maybe a retest of your prior all-time highs right here. That's this location too. So you can see it, very strong, big resistance area prior, should be newfound support. 50 EMA on the dailies right there. And the 12 EMA on the weekly is going to be there as well. So a lot of moving average confluence across the timeframes in this pretty much 430, 425 location. Could be once again, breakout, retest of the all-time highs, and maybe on for another leg on Microsoft. In terms of the monthly candle close is gorgeous right now. Beautiful monthly uptrend, no red flags to speak of. So the bull is still in all long-term control of all of these timeframes. Moving on to Netflix right now. Netflix down 1.38%, failing the previous 52-week highs, right? So now double top scenario. Now we look to the lows right here, 663.37. Break that. Daily downtrend is unfortunately underway. And then we look to the weekly, guys, for a little bit of weekly consolidation. Anything above 626, just going to be looking for those weekly higher lows for the eventual trend continuation. Keep a very close eye on this level that I've labeled on the chart. Prior resistance, current support could be a first line of defense for the bulls before they maybe muster up a daily trend change attempt. And even on the weekly, guys, that is really, really big weekly support too. I don't think the bulls are going to allow the bears to get all the way down to the weekly higher lows. At best, they may get as close maybe to 650 and maybe then launch for another weekly leg higher. So all in all, Netflix, no red flags on the larger time frames. On the monthly as well, no red flags too. Gorgeous monthly candle close. Really looks like over the next few months, guys, Netflix will be breaking and attacking and then breaking the all-time highs. So short term, not looking, not looking the strongest if we do pull back a bit more, but long term, this one looks excessively gorgeous, similar to the rest of our big tech names, right? Everything on the longer term timeframes looks very, very good. Just a little bit of rotation of the downside on the shorter term timeframes. On to NVIDIA right now. So NVIDIA seems as though they want to set the lower highs and maybe revisit these lows. That was one of our concerns, guys. Large pullback. The size of the bounce was okay. Maybe about 38, 40% bounce. Not the best, guys. It gives the bears the opportunity at revisiting these lows. So we'll be watching these next week. 117.85. Break that. First daily downtrend on NVIDIA since the month of April. That will be notable to us. So if ever we come down here, guys, yes, this area is a most recent area of support, talking about 120 down to about 115. But if we get through that here, guys, daily downtrend will be well underway. And then we need to look to the weekly, guys, for a bit more consolidation, right? Thereafter, my target becomes 108, the 12 EMA, something that NVIDIA has held almost this entire rally, right, since last year. So that'll be the next line of defense. Just looking for a bit of a weekly higher low, anything above 75, guys. So much space. And it looks like we've pulled back a lot, but in the grand scheme of the move here, guys, we've only pulled back not even 30% of the move. Looking excessively good on NVIDIA for the eventual continuation as soon as this consolidation is finished. On the monthly, no secret there. Big doji candle on top here, but looking very good for that monthly trend continuation here, guys, right? Anything above pretty much that same level, 75, looking for that monthly higher low for further trend continuation. So if July starts off a little bit red, and then retest maybe, that could maybe be a future entry for NVIDIA stock. We'll keep a very close eye on this one. I will still be looking to play this one as close as possible to 110, 105 as I can, depending on how much premium they give me. Moving on to Tesla right now. So Tesla trying its best to break out in the morning, guys. Tesla actually barely hit the 200, right? 203 for literally about an hour, and then unfortunately came down. Tesla deliveries are slated to be released on Monday. That will be the market event, moving event for this stock. If deliveries are a lot better than expected, expect us to maybe retest 205 all the way maybe up to about 214. That's the next area that the bulls can attack. In terms of if deliveries come in underwhelming and under the expectations, well, then Tesla may have to just revisit the lower area of support right down here at about 188, 187, right? Daily uptrend is healthily in motion. They have a lot of space, anything above 181, looking for that daily higher low for the trend continuation. But as I said, guys, delivery numbers are going to be everything for this company. Moving on to the weekly now. Weekly not looking too bad, right? Weekly tightening range, weekly breakout. So it is technically a weekly uptrend right now. Struggling a little bit with the moving averages right now. The green line right here is your 200 weekly moving average. The pink line is the 50. So if we can get above those with good delivery numbers next week into the 205, 210, excuse me, could be a nice catalyst to maybe bring us further into the 220. And if I were to extend this trend line right here that we have, right, you can see that trend line gets broken at about 210. That would be huge. This is pretty much a 1-year trend line at this point. And if they attack it and break it, could be a very good thing for Tesla to start gaining the levels as investors start getting more and more confidence in the company's ability to get through this, consumer discretionary spending recession, so they speak, right? So it's all going to be in those delivery numbers on Monday. We will keep our eyes peeled. And then depending on what happens on Monday, I will tell you guys what I'll be doing for positioning. Moving on to Palantir. But as a whole, guys, if we do retest this lower level right here, let's say, I will probably be writing short puts, maybe 178, 175. Moving on to Palantir right now. Palantir acting pretty much unaffected from today's events. So Palantir, a very, very strong company, right? They really are not affected by overall macro slowdown. They're all about increasing company productivity, and their products are in high demand from corporations and governments alike. That being said, very nice daily uptrend right now, looking extremely good. And what we can see here is they've created a lot of space, anything above 24. As soon as this move tops out, looking for a daily higher low, anything above 24, looking for that daily higher low for the trend continuation. On the weekly as well, weekly looking very, very strong with that candle close. Gorgeous weekly uptrend right now. And in the event that Palantir loses the levels because of overall market weakness, just going to be looking for a weekly higher low, anything pretty much above 20.5, looking for that weekly higher low for the eventual weekly trend continuation. If we do pull back, guys, I'm targeting 23 down to about $22 as my next sweet spot for taking a few swing trades on Palantir. But as of now, the bull's in full control. On the monthly as well, monthly trend continuation looking very good. We waited for the monthly higher low for a long time, guys. We were playing it in this level. Now, finally, we get the monthly trend continuation. And if this does continue, July and August, we should be attacking the infamous $28 level that we struggled with in the past, maybe looking to break that over the later part of the year. Now, moving on to PayPal. PayPal continuously struggling here, guys, not having a very good day. 0.58% to the downside. Daily downtrend, unfortunately, simply continues at this point, coming to a large area of support. This is pretty much 58 down to 56. This is the cannot lose level for PayPal, in my opinion, guys. If you lose this, you lose all of your longer term time frame structure. So what the bulls need to do, guys, when this bounce happens, need to get as high as possible in relation to 60.7. That gives us the best chance of reversing this into a new daily uptrend and attacking this big area of resistance. As of now, the bears are in full control. In terms of the weekly, guys, weekly not looking the best as of right now. You can see weekly just a significant weekly downtrend right now. No end in sight, not even close to being weekly oversold, not even really close to be daily oversold either. So the bears could push this one a little bit further, but as I said, cannot lose this location, guys. It's been support for this market since the month of December, pretty much. If we were to lose this, it would really not be good for the stock because then we would be losing the monthly timeframes as well. It is still a monthly uptrend, but we've taken back so much of the move, guys, that it may just take a long time to reset this into the future. 2024 is going to be a transition year for the company. Not only have I said that, management has said that as well. So maybe only good things coming for PayPal when we get lower interest rates because this company is so heavily affected by interest rates. PayPal, if I'm to play it, if I really had to play it, guys, I'll be looking for short puts as close as possible, 56, 55, because that's when the valuation for me really makes sense down there. So that's pretty much everything for today's video, guys. I'll do a portfolio update on Sunday just because this video is a little bit long so far. But all in all, guys, decent week of trading. I did get crushed on Nike yesterday. I had to close that one for a $500 loss on the shares, but I did actually throw some calls at it because I think the move's a little bit overdone. And as we saw, Starbucks, after their earnings crush, took a little time, but then they eventually did have a rally. I'm not looking for Nike to do something like this, but if we can get a little motion like this on the same thing we had on Starbucks, if we can get that on Nike, just a little bit of recapture here, my call should do quite good and should be able to erase some of the losses that I took on the shares today. So that's pretty much everything for today's video, guys. Hopefully you appreciated it. If you did, consider dropping a like for the growth of the algorithm. Would really love you guys for that. Also, consider subscribing to the channel if you're new. We do these videos every Monday to Friday after the close. Tomorrow, going to be doing a subscriber ticker request. Have a lot of requests for tomorrow, so it should be a very interesting video. And then on Sunday, we'll do the top 5 options plays as per normal. And then guys, if ever you have any questions whatsoever, feel free to leave them down below in the comments. If you want a second opinion on a stock, technical analysis, an options play, macro discussion, anything you guys want, please leave it down below in the comments and I'll get back to you within the first 24 hours. Take care, guys, and peace. Have a beautiful weekend. See you soon.